Hi everybody, this is Lara from Pure Elliott Wave. I'm going to analyse silver with you. I'm going to do a pretty thorough analysis. This might take a little while. Before I get into that, just to let you know that coming up, I'm going to start providing daily euro dollar analysis. It'll be an analyst I'm training. His name is Jordan Marshall, and he will be providing euro-dollar analysis 5 times a week with text and charts Monday, Tuesday, Wednesday, Thursday, Friday, and a video as well on Friday. When we launch that as a new product, we will offer a grandfather rate that will be offered for the first 48 hours, and it will never be offered again. So if you want to get that regular 5 times a week euro analysis from us, click on the link in the description box below this video. It'll send you through to this page where you can give us your email address to be added to the notification list, and we will let you know when we launch the euro analysis, and you'll have an opportunity to get it at a grandfather rate. It'll be a very good rate, and it will never again be offered, only that one time. Okay, let's get into some silver analysis. I have 2 monthly wave counts. This is a bearish wave count, and then when I've gone through this, I'll look at a bullish wave count with you. I prefer the bearish wave count because this wave count sees a grand supercycle degree second wave correction continuing further. The bullish wave count sees it over back at this low here, and that's too brief. A grand supercycle degree wave should last generations, should be at least 30 or 40 years. So this wave count expects that when it's over, grand supercycle 2 will be lasting about maybe 30 years or so, and so that would be a normal expectation for the duration. That's a big reason why this is the main wave count or preferred wave count for silver. The structure of grand supercycle 2 is a zigzag. Cycle A over here is an impulse, cycle B over here is an expanded flat, and cycle C continuing lower. Cycle C may only subdivide as one of 2 structures, either an impulse or an ending diagonal. It looks like it's most likely unfolding as an impulse. For either of those within it, cycle 2 may not move beyond the start of 1 above 29.820. Let's take a look at the weekly chart. This high here of supercycle wave B is this point down here. From this high to this low, this downward movement fits very well as a 5-wave impulse. There are 2 structures for supercycle C, either a diagonal, an ending diagonal, or an impulse. Within an ending diagonal, all of the subwaves must be zigzags. Within an impulse, wave 1 must be a 5-wave structure. And so if cycle wave 1 is correctly labelled as a 5-wave impulse, that means supercycle C is most likely subdividing as a 5-wave impulse. So 1 may be over here, 2 may be nearing completion, and it may find resistance at the upper edge of this channel. Just quickly going back to the monthly chart, it's important to draw this channel from this high here in 2011 to this high here, I think at the end of 2020. This may provide resistance for this bounce of cycle wave 2. Here it is on the weekly chart, and so I expect a little bit more upward movement to be a test of resistance at this trend line, and then cycle 2 may be over. Cycle 2 may not move beyond the start of 1 above 29.820. When 2 is over, this wave count expects a 3rd wave down at cycle degree. The final target for supercycle C is for it to reach 0.618, the length of supercycle A, at 7.46. Let's take a look at the daily chart now. The low of cycle wave 1 down here is this point down here. We're looking at the structure now with cycle wave 2. It's subdividing as an impulse, as a zigzag. Primary A an impulse, primary B a zigzag, primary C an incomplete impulse, with intermediate 1, 2, 3, 4, and the final 5th wave showing some strength. Pretty common for commodities to have strong 5th waves. Here's an example. This little 5th wave was quite strong, and so it's quite normal to see a strong 5th wave for a commodity. The target is for primary C to reach equality in length with primary A at 26.84, but I would rather use this trend line to show where cycle 2 may come to find resistance. Within the impulse of primary C, if intermediate 4 continues, it may not move into wave 1 price territory below 22.343. On the monthly chart, this is a bullish wave count. If your own analysis of silver is bullish, you may choose to use this Elliott wave count as your road or pathway for your expected next movement. If grand supercycle 2 is over here, it's lasted just 8.9 years. That's less than 10 years. A grand supercycle degree wave should be lasting longer than 30 years. Even a correction, even a counter trend movement. Commodities or silver and gold and indices also have a very strong bullish bias. That means that their waves to the upside, the emotive waves, can be a lot longer lasting than normal guidelines would expect for each degree, but the counter trend, the downward waves, the bear markets are often a lot more brief than the guidelines would suggest. So this is possible, but it is not just a bit more brief or somewhat more brief, it's exceptionally more brief than a grand supercycle degree second wave should be expected to last. I would expect at least 30 years. This is over in just 8.91 years, so that reduces the probability of this wave count. That's pretty much the biggest reason. I do certainly acknowledge this is absolutely a valid wave count and there is some support for this idea, and my grand supercycle analysis could be wrong. This may not. This may be just a cycle or supercycle degree wave, not a grand supercycle. So considering all of that and understanding that I could be wrong, what if this correction was over here and we're in a new bull market? I would still want to label this a first wave at cycle degree and a second wave at cycle degree, which looks like a complete structure. If it continues lower, it may not move beyond the start of the first wave below 11.703. Let's take a look at the weekly chart. This high here is this point here, cycle wave 2 fits as a regular flat correction. Wave A subdivides as a 3, wave B subdivides as a 3 and moves slightly beyond the start of A. Wave C subdivides as a 5. This is a regular flat. It meets the rules for a regular flat, but it doesn't have a normal look for a regular flat. Primary wave C is much longer than you'd expect for a regular flat. Within a regular flat, B is from 90% to 1.04% the length of A, and C usually ends about the same level as A. This one ends substantially beyond the end of A, more like an expanded flat. And so a little bit the probability of this wave count is a little further reduced. There's a bit of weakness in terms of volume and range, which we'll get to when we get to the stock charts, technical analysis charts, and that further reduces the probability of this wave count. So for all of those reasons, that's why I'm judging it to have a lower probability. You may disagree, and that's absolutely fine. If you disagree with me, you may want to use this as your roadmap, as your Elliott wave count. If a big second wave correction is over there, then a third wave should have begun. The target is for cycle 3 to reach 1.618, the length of cycle 1, at 46.82. A third wave may only subdivide as an impulse. Primary 1 looks complete. Primary 2 may also be complete. Primary 3 has moved beyond the end of 1, meeting the core Elliott wave rule. Within it, no second wave correction may move beyond its start, below 19.909. A reasonable target for this third wave is for it to reach 1.618, the length of the first wave, at 31.12. Draw a base channel around primary 1 and 2 from the start of 1 to the end of 2. Place a parallel copy on the end of 1. This channel has a few tests of resistance and a few tests of support. The upper edge of a base channel should be breached by the power of a third wave in the direction of the trend. The lower edge of the base channel should provide support for any deeper corrections along the way up. Let's take a look at the daily chart. We're going to look from the low of cycle 2 here. This low down here, primary wave 1 subdivides as a 5-wave impulse. Primary wave 2 subdivides as a zigzag with a very short intermediate A. Complex expanded flat for intermediate B. Within B, minor B is a zigzag, and within that, minute B looks like an expanded flat as well. If intermediate B there, intermediate C is over, it will fit as a 5-wave impulse. And my degree of labelling here for the start of primary 3 might need to be moved down 1 degree. If that's the case, the invalidation point should be down here. But either way, an impulse is unfolding upward. This wave count expects intermediate wave 5 to be a very long and strong extended wave. Now, it's actually pretty common for commodities to see fifth waves within a third wave 1 degree higher to be particularly long and strong, particularly at a higher degree like intermediate and primary. So this degree of labelling could be correct. Within the impulse of primary 3, intermediate 1, 2, 3 and 4 may all be over. If intermediate 4 is not over, it can't move into wave 1 price territory below 22.343. This wave count expects intermediate 5 to be a particularly long and strong extension in order to reach the target at 31.12, and along the way primary 3 should breach resistance at the upper edge of the base channel. We may find a bit of resistance here and a pullback before price breaks through, closing above the line. If that happens, then look out for a sharp, quick pullback to find support about the line before price moves up and away. On the monthly chart, the last completed upward month has some push from volume. That's a little bit bullish, and there's a bullish lower wick. But at this time frame, ADX tells us there's no clear trend, and price is essentially consolidating, currently with resistance 26.2 and above that at 28, and support about 21.5. On balance, volume has no support line, but there's a little resistance line here. This may assist to halt a rise in price, but that could come only in another month or so. RSI money flow all neutral, and ATR flat to declining as price moves essentially slowly lower. On the weekly chart, at this last low here, there's no bullish candlestick reversal pattern. This upward movement started with strong range and strong volume, but the last 2 completed weeks are showing weaker volume as price moves higher. At this time frame, there is an upward trend, and it is not extreme, and RSI is not overbought. So look out for price to continue higher, and look for next resistance 26.2, and above that 28. On balance, volume has no new range at this time frame, no signal. We've been over RSI, money flow also neutral, stochastics entering overbought, but when ADX says there's a trend, I'm using RSI and money flow, not stochastics. This is here for a consolidating market. ATR is overall flat as price is moving mostly sideways with a downward bias. At the daily chart level, there's also an upward trend. At this time frame, it's now extreme, but it's not very extreme. It's above both DX lines, but it's not yet above 40 or 45. RSI has just dipped into overbought. It's back in neutral, but there's no bearish divergence, so there is still some room above for this upward trend to continue. Look for immediate resistance just above about 24.50. Volume is declining, price is rising. Price is rising, range is declining. For the bullish wave count, if you expect that this is a third wave, we should not be seeing declining range and volume. That is quite a concern for that bullish wave count for at least the short term, and that's another reason why I prefer the first bearish wave count. The moving average situation is full bull bullish. We did have a golden cross back here. That supports the bullish wave count. On balance, volume has no technically significant range. I could draw resistance and support, but the trend lines would have too strong a slope for reasonable technical significance, so I'm not going to do that. No range, no signal at this time frame. We've been over ADX. RSI, money flow, all both neutral. Stochastics overbought, but when the market trends, that can remain extreme for a long period of time. We've been over ATR. That's it from me with some silver analysis for you. Don't forget, if you're interested in 5 times a week Euro analysis from Pure Elliott Wave, Jordan Marshall will be providing that. I've trained him. He's nearly ready. He'll have my oversight quite carefully for as long as he needs it, whether it be 1, 2, 3 years, however long. But if you want to get that analysis from us, click on the link below so that you can get it at a grandfather rate. I'll only offer that once for the first 48 hours, and never again will it be offered, and it'll be a pretty good rate. That's it from me, and thank you so much for watching. If you managed to get to the end, good on you, and I hope you're all having a fantastic day.